This is Craig Haugard with your Financial Issues Ag Update. Well, we had a wild stock market again yesterday, and that coupled with nothing bullish in the monthly USDA supply and demand report had corn prices under pressure. Basically, I believe that we are trading the idea of a large U.S. and South American crop once again. The crop that's being harvested in Brazil is worth one-third more than it was last year. As we've discussed recently, the collapse of the Brazilian real creates a situation where the dollar-dominated import-export flows convert into more reals when that currency is in retreat against the dollar. And that has got Brazilian farmers actually feeling pretty good about what's going on from a price perspective. Ukraine corn offers also continue to undercut U.S. values by 27 cents per bushel into China. This remains a very competitive market environment. With ethanol production margins remaining at or below break-even levels, it probably wasn't surprising that the weekly ethanol production figures showed a week-over-week decline of 35,000 barrels per day, while stocks declined sharply by 637,000 barrels. In spite of this reduction, the stocks remain 2.5% higher than they were a year ago. As I record this, the overnight spot corn futures are still under considerable pressure, trading 5 cents lower. Soybean prices yesterday got off to a good start on the sale of soybeans to an unknown destination. But then as the outside markets headed for the gutter, soybean prices slid as well, eventually closing 3 to 4 cents lower for the session. The pressure from the outside markets continues today, and as a result, we have the spot evening soybean futures trading down 12 cents as I record this. Wheat prices were 6 to 9 cents lower on continued weakness in the outside markets, coupled with technical selling and an overall lack of demand for U.S. wheat. That is continuing in the overnight. We have Chicago down a dime, Kansas City is 7 cents lower, and Minneapolis is trading a nickel lower as I record this. Yesterday, the cotton market managed to close higher for the second consecutive session, as we saw the May futures close up 14 points to settle at 61.55. In the overnight trade, however, that's all being reversed. We have the spot futures trading 96 points lower. Livestock futures were lower straight across the board. The April live cattle futures contract finished down $2.37.5, while April feeder cattle were $4.42.5 lower. Lean hog futures were weaker as well, with the April futures finishing the day down $1.12.5. Class 3 milk futures traded in a fairly narrow range and closed softer, with the April futures closing down 2 points as they settled at $15.83. In the overnight trade, we have the spot futures down an additional 6 points. Cash livestock markets were split. At the close, we had choice beef boxes 8 cents higher as they settled at $207.17, while selects were $2.22 lower, closing at $196.49. Pork carcass values were a bit stronger as they closed up 86 points, settling at $68.82 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.